Hey there, tech fans. Welcome to the Tuesday edition of the Tech Stocks Daily Podcast. Today's episode is brimming with exciting updates. We'll dive into how Google's new AI partnership is revolutionizing captions and gardening advice, including major moves in the streaming and gaming world. Eaton is making waves with some massive options trading activity. Are big investors onto something? CrowdStrike faces a pivotal day with analyst upgrades juxtaposed against Congressional testimony for a massive IT outage. Finally, Zoom is rolling out top-tier tools, boosting security and efficiency for enterprises. Stay tuned, you don't want to miss these blockbuster updates. Let's jump right in. All right, tech enthusiasts, let's dive into today's headlines, and who better to kick things off with than Google. They've been busy making waves in multiple arenas, and their fingerprints are all over the tech news today. Let's break down why Google, and more precisely Google Cloud, is in the spotlight. Firstly, let's zoom in on the blockbuster partnership with Warner Bros. Discovery. The dynamic duo, Warner Bros. Discovery and Google Cloud, have teamed up to supercharge the Max streaming platform with AI-generated captions. This collaboration is anything but a filler episode. It's poised to significantly enhance caption accuracy and efficiency. The brains behind this grand experiment have aptly named it Caption AI. Powered by Google's Vertex AI platform, this smart tech can slash the time needed to create captions by up to a staggering 80%, while also cutting costs by about 50%. Picture this, you're binge-watching Game of Thrones without any caption glitches. Initially targeting unscripted programming, this AI tool won't just spell out dialogues, but will probably do it with the flair of Tyrion Lannister's wit. Avi Saxena, Warner Bros. Discovery's tech guru, emphasized that top-quality captions aren't just a luxury, they're essential. And who would dispute that, especially with such beloved shows in the mix? Next up, our star player Google has been moonlighting with ScottsMiracle-Gro, another giant, this time in the lawn and gardening sector. ScottsMiracle-Gro has introduced an AI-powered agent, thrillingly named the Gardening Sommelier. This bot isn't recommending wine to pair with your dinner. It's rolling out bespoke gardening advice and product recommendations. Built on Google Cloud Vertex AI, this tech marvel is first being tested by ScottsMiracle-Gro's internal team and is soon to be unleashed to over 1,000 field associates. Imagine a sales associate armed with a virtual green thumb answering any plant-related quandary at the drop of a hat. Emily Wall, ScottsMiracle-Gro's VP of IT, is obviously jazzed about how this tech can pare down the colossal 450-page training manual to a mere touch of a button on a mobile device. Who wouldn't be? It's like going from dial-up to fiber optic. Lastly, Google's got its gaming gloves on with Solana Labs. They've launched GameShift, a Web3 API aimed at making the once daunting task of integrating blockchain tech into traditional games as simple as pressing start. Announced at the 2024 Solana Breakpoint Conference, GameShift is designed to bring Web3's magic, think NFTs and digital assets, into the well-loved realms of traditional gaming. This integration is set to be a game-changer for developers looking to bridge the gap between conventional and cutting-edge gaming experiences. And there you have it. Google Cloud is not just clouding around. It's making solid moves in streaming, consumer retail, and even gaming, proving that whether you're on your couch, in your garden, or in a virtual battlefield, Google's cutting-edge technology is setting the stage for a seamless, smart, and seriously thrilling future. Hey tech enthusiasts, so what's the buzz today? Well, let's dive right into what's hot on the market radar. Eaton Corporation. Yep, that's right, Eaton has been making quite a ripple, and let me fill you in on why. First off, it's all about the options trading activity that's caught everyone's eye. According to Benzinga's options scanner, some serious whale trades, yeah, we're talking investors with deep pockets, have been spotted making moves on Eaton Corporation. In total, there were 12 uncommon options trades, which are raising eyebrows and making folks ask whether someone knows something the rest of us don't. Now let's break down those numbers. Out of these 12 trades, 8 are call options amounting to a grand total of $590,776, and 4 are put options tallying up to $181,040. If you're new to options trading, here's a quick primer. Calls are generally bullish, while puts are bearish. So in Eaton's case, 33% of the sentiment was bullish, while 50% was bearish. That is, leaning a bit towards a downtrend. The big bucks have been placed on strike prices ranging from $300 to $370, signaling where these investors think Eaton is headed in the near term. This flurry in the options market hints at potential moves in Eaton's stock price. But what's driving all this interest? It might have something to do with Eaton's solid performance lately. The company has transformed itself from humble beginnings into an industrial giant. Today, Eaton's revenues primarily come from its electrical and industrial businesses. This involves data centers, utilities, and even aircraft parts. Also interesting, Eaton benefits from being domiciled in Ireland for favorable tax treatment, while still pulling in over half its revenue from the US. Moving on from the options excitement, Eaton's stock performance has been top-notch too. Let's look at the numbers. Eaton has returned 36.9% so far this year, significantly outperforming the industrial products sector's average of 12.1%. Heck, Eaton is among the top players in its sector, even outpacing other strong performers like Graham Corporation, which has boasted a 59.9% year-to-date return. What makes this more interesting is how the broader sector is doing. Eaton is part of the manufacturing electronics industry, which has seen an average 14.9% uptick this year. Not too shabby, right? In contrast, Graham, sitting in the manufacturing general industrial industry, only ticked up by 11% overall. So what does this all mean? Whether bullish or bearish, it's clear that investors are placing significant bets on Eaton, underscored by its impressive stock performance and solid business fundamentals. Investors interested in industrial products should definitely keep an eye on Eaton and Graham as they continue their upward march. If you're looking to dig deeper, tools like Benzinga Pro can give real-time alerts to keep you ahead of the curve. In a nutshell, Eaton is making big waves, and savvy investors are strapping in for the ride. Stay tuned, folks. This one's worth watching. Buckle up, tech enthusiasts, because CrowdStrike is strutting its stuff all over the news today. Let's break down why this cloud-based cybersecurity titan is making headlines and setting tongues wagging. First off, let's talk numbers and analyst moves. Joseph Gallo over at Jefferies sure stirred the pot by maintaining his buy rating on CrowdStrike stock while bumping up the price target from $355 to a spiffy $345. Talk about confidence. This forecast does more than just break the ice. It helps boost investor sentiment and provides a shiny new target to aim for. But it's not all sunshine and rainbows. Adam Myers, a senior executive at CrowdStrike, is slated to testify before the U.S. Congress. The topic? The massive global IT outage that occurred on July 19th. This incident wasn't your run-of-the-mill glitch. It was a full-scale digital tempest caused by a software update gone horribly awry. The catastrophe left travelers stranded and small businesses counting their losses, affecting millions of computers running Microsoft systems worldwide. Yep, you heard that right. Millions. According to a report from the BBC, Myers is expected to express deep regret while emphasizing CrowdStrike's commitment to preventing such a catastrophe from happening again. Hey, they're only human, but this level of disruption was monumental. Even security researcher Troy Hunt described it as the largest IT outage in history, making the Y2K bug look like a minor hiccup by comparison. Now let's talk about the stock action. Despite the recent analyst love, CrowdStrike shares dipped a smidgen by 1.09%, trading at 289.94 last time we checked. Even the best jugglers drop a ball now and then, am I right? Shifting gears to options trading, big financial players are showing varied sentiments towards CrowdStrike holdings. Our deep dive into their options history revealed 9 unusual trades. Seems like the big guns are both bullish and bearish on this nascent tech darling. Out of those trades, about 33% were bullish, while 44% leaned bearish. The puts and calls had substantial dollar values attached, $68,034 for puts and $333,137 for calls, respectively. Further analysis shows these big money traders are eyeballing a price window of $240 to $330 for the past quarter. With an average open interest of 1,052.12 and total volume of 571.00, it's clear the options market is buzzing with activity when it comes to CrowdStrike. To wrap this all up in a neat cybersecurity firewall, CrowdStrike, with its robust Falcon platform, continues to blaze a trail in the cybersecurity realm. While they've clearly got the faith of investment analysts, they're also facing the ramifications of being a cornerstone in the global IT infrastructure. This dynamic means they are both a darling and a cautionary tale in the current tech climate. So there you have it. From market maneuvers to congressional moments of truth, CrowdStrike is certainly keeping the buzz alive. Stay tuned, because this cybersecurity juggernaut isn't stepping out of the limelight anytime soon. Hey, tech enthusiasts, ready to be blown away by the latest from the world of tech? Today we're zooming in, literally and figuratively, on Zoom. Yes, you heard me right. Zoom Video Communications Inc., which trades on the NASDAQ under the ticker ZM, has been making major waves. So why exactly is Zoom in the news today? Zoom has unveiled a set of new advanced enterprise offerings that take its suite of tools for large organizations and regulated industries up multiple notches. These new add-ons are more than just fancy bells and whistles. They're aimed at seriously beefing up efficiency, reliability, security, and compliance for businesses that rely heavily on seamless communication. So what's in these new updates? For starters, these offerings cater specifically to the complex needs of sectors like finance, healthcare, and government, where robust security and compliance are absolutely non-negotiable. The new features include enhanced business continuity tools, bandwidth optimization, and additional security layers. Smita Hashim, the chief product officer at Zoom, had a lot to say about the new offerings. According to Hashim, these advanced tools are essential for making sure that platforms like Zoom Workplace and Zoom Business Services run as smoothly and securely as possible. It's all about providing exceptional user experiences behind the scenes and meeting those stringent compliance and security requirements. Can I get an amen for hassle-free Zoom calls? This set of upgrades is also tackling a big business pain point: network reliability and bandwidth issues. In 2023 alone, more than 31% of enterprises experienced unstable networks and bandwidth constraints. That's a lot of unhappy employees and dropped calls, people. Zoom's new features are aiming to drastically cut down on these issues, improving overall satisfaction and operational efficiency. You might be wondering, why all the focus on security and compliance? Well, last year, over $549 million in non-compliance penalties were dished out globally, impacting more than 353 million people. These aren't just numbers, they're major red flags for any business. Zoom's new features, including end-to-end encryption and GDPR controls, provide much-needed peace of mind in today's volatile digital landscape. Not to forget, there's also an exciting partnership with Mitel. Yeah, Zoom is teaming up with Mitel to deliver a hybrid cloud solution, integrating Zoom's workspace and AI companion with Mitel's communication platform. This fusion is set to make hybrid unified communications more seamless, secure, and productive than ever before. These advanced enterprise tools aren't just limited to existing licenses, but are available as paid add-ons, making it easier for organizations to customize according to their needs. And hey, Zoom is even hosting technical sessions at Zoomtopia 2024 for anyone looking to dig deeper. So what do you think, viewers? Are you impressed with Zoom's new enterprise offerings? Do these new features make you more confident in using Zoom for your business needs? Drop a comment below and let's get this discussion rolling. Your insights are like the emojis to my reactions, absolutely essential. And that's a wrap on why Zoom is dominating today's tech news headlines. Stick around for more updates, because the tech world never sleeps, and neither do we, particularly after that triple shot espresso. Cheers. All right, tech enthusiasts, buckle up because I'm about to break down whether to buy, sell, or hold one of the star stocks from today's news. And today's spotlight shines brightly on CrowdStrike. Now the big question, what should you do? Buy, sell, or hold CrowdStrike shares? Given the news today, my recommendation is to hold on to your CrowdStrike shares. Here's why. First off, let's talk about Jefferies analyst Joseph Gallo giving CrowdStrike a thumbs up by increasing the price target to $345. That suggests confidence in the company's long-term potential and indicates that the stock could have upside from its current trading levels, despite the slight dip recently to $289.94. Analyst upgrades are generally a bullish sign, showing that they see value in growth prospects that might not yet be reflected in the stock price. However, CrowdStrike is having some turbulence with the whole testify before Congress situation. The July 19th global IT outage incident casts a shadow and introduces a bit of uncertainty. But remember, it's not unusual for tech companies, especially in cybersecurity, to face bumps in the road. The key is how they navigate through it. Despite this hiccup, CrowdStrike remains a heavyweight in the cloud-based cybersecurity space with its Falcon platform, which has been a fortress for many enterprises against cyber threats. The company has strong fundamentals, leading technology, and high-bar analyst ratings. It shows resilience and the ability to recover and thrive. Given the mixed sentiment from options traders, some are bullish, some are bearish, it's clear that professional investors have varied takes on the short-term outlook. That adds a layer of caution, which backs a hold strategy, keeping an eye on the developments but not making hasty decisions. In summary, the positive long-term prospects, coupled with the current valuation and recent news, make CrowdStrike a stock worth holding on to. Let the situation with the Congressional testimony unfold, and keep tabs on further analyst updates to see if any new insights tilt the scales. But for now, it feels prudent to not rush into buying more or selling off what you have. Remember, folks, always do your own research and consider your risk tolerance before making any investment decisions. Your investment journey should be guided by as much information and as many perspectives as possible. Stay savvy. Got thoughts on CrowdStrike? Drop them in the comments below. Let's chat stock strategy. Looks like it's been a whirlwind day on the NASDAQ, with Google revolutionizing captions, gardening tips, and gaming integrations, Eaton riding investor waves with intriguing options activity, CrowdStrike navigating both bullish analyst sentiment and congressional scrutiny, and Zoom rolling out top-tier upgrades focused on security and reliability for big businesses. Get ready for more tech tidbits tomorrow. Don't forget to like, subscribe, and share this video. See you back here with your next dose of tech updates.